I think like everybody, we've all been glued to our chairs doing webinars and online meetings and stuff. I was on one earlier today where someone said, there are no fire alarms planned. If the fire alarm does go off, please leave. I thought actually that's quite good. But yeah, so, you know, don't put your toast on while we're on a call just in case you happen to burn it and then we have to lose you. So thank you to you for joining us this evening. It's been the wildest 3 weeks ever, hasn't it? I think, you know, we did a webinar this afternoon that was a fairly straightforward networking one, and somebody said, I thought working from home was going to be easy, and I don't think I've ever worked harder in my life, and I think I can absolutely resonate with that. Our team's been remote working for 3 weeks, and like many of you, it takes a bit of getting used to, but actually we've been really lucky in how well our systems have coped with it and how amazingly our team have adapted our services and events and other things to cope with that. We've been doing a lot of webinars and online sessions, so I just did a bit of a quick count up. In the last just about 2 weeks, we've done 10 webinars, a couple private, but most have been public. And we are videoing a lot of our webinars so that people can then view them afterwards. And we started our programme last Wednesday, which is about mental health and well-being, and that's been a really popular one. It's definitely going to become something that once we get over the hurdles of trying to work out what our business needs to do, our people and their mental health and our friends and our family, and that is going to just become something really critical. So we had a really good session last week. If you've not had a chance to see that, then jump on our YouTube channel, and that's where you'll find the recording from tonight. So we will share that in due course. But like a lot of chambers, we've been busy just listening and reacting and supporting businesses, and we're working with members and non-members at the moment just to signpost and answer all the questions people have got about when, you know, am I eligible for the grant funding? When can I apply for it? How do I apply for it? What about the business loan interruption scheme? What about furloughing people? How do I do that? How do I know whether I'm entitled to some of the support that's out there? This afternoon, I was on a call with Fiona Hislop and Jamie Hepburn from Scottish Government, and we were still, as a network, raising a lot of the same questions that there are not a lot of answers to. You know, the people that are falling through the cracks in the business support, that don't have business premises and can't get the grants, that are director owners or you know, not putting a lot of income through PAYE. And so I think we'll cover some of that this evening in terms of trying to get businesses to think about all the things they're entitled to. But this is a really important session that we're going to do this evening. The Chamber also last week launched a Partners for Business programme. So we've got 17 partners that we launched this programme with. They are going to take part in our webinars, they're going to write articles for our website, and they're also going to mentor businesses. So some very short, sharp support for businesses at this time where they either might be flying and can't cope with all the work they've got, or they're in a bit of crisis mode and they're just wondering what to do. Again, somebody on our call this afternoon said, it seems really wrong that the government wants to make us furlough everybody in order to get the support, when what we should be doing is thinking about pivoting and innovating our business models. And so perhaps people will take a bit of time when they are furloughed to actually do some of that thinking and access some of our partners to get that support. We've been doing a lot of talking to members and reaching out to members and getting lots of really good feedback, but lots of really quite emotional and scary stories. So we're adapting our webinar programme to make sure that businesses are getting the help that they really need. So I think really that's all from me, just to say that I'm looking forward to the discussions this evening. It's amazing how quickly you turn around a webinar. So I think it was last Thursday, we had a meeting and we thought we'll get together and talk about what can we do together. We had a plan A from about 6 weeks ago, and we've shelved plan A. We're now firmly on plan B. And the team for plan B is pretty good this evening. So I'm going to introduce one of our speakers to you, and then they will just hand over to each other. But our speakers this evening are Alan Davis, who's the VAT partner and chairman of MHA Henderson Loggie. Then we've got Shona Campbell, who's Director of Restructuring at MHA Henderson Loggie, and then Rod Mathers, who's Corporate Finance Partner at the firm. So I'm going to get out of the way, stop talking and hand you over to Rod. So Rod, you need to remember to unmute yourself and then I'll let you know I can hear you, and then I will go on mute and listen.
Thanks, Alison. Can you hear me okay?
Sure can. Cool.
Great stuff. Yeah, so thanks, Alison, and good evening, everyone. I'm Rod Mathers. I'm a partner at MHA Henderson Loggie, and I head up the firm's corporate finance team. And I think under normal circumstances, I'd be working with clients who are looking to either sell their business, acquire a business, or looking to raise funding for growth or for working capital. But I think it's fair to say that many of our clients are in a position where they're looking to improve their own business and basically stay alive until they get to the other side of this crisis. So, you know, a focus for many companies is company owners and company directors is to protect their business and take the necessary steps to continue with a viable business going forward. So I think this evening I'm going to talk about three things. Firstly, the support that's available under the Business Support Fund. Secondly, the various business interruption loan schemes that are available depending on the size of the business that you are. And thirdly, I'd like to give you some practical advice on how to manage cash flow during this difficult period. So firstly, the Business Support Fund is administered by local authorities on behalf of the Scottish Government. And some of the support that's available includes full year 100% non-domestic rates relief for retail, hospitality and tourism businesses. There's a £10,000 grant, again, for small businesses who are in receipt of the Small Business Bonus Scheme or Rural Relief. And finally, there's £25,000 grants available for hospitality, leisure and retail properties with a rateable value between £18,000 and £51,000. So I understand the application process is relatively straightforward, and given this is free money from the government, I would encourage everybody to inquire with the local authority, and they'll help you through the application process. I believe the scheme ends on the 31st of March 2021. So that's good news for small businesses. And I think one of the main support initiatives by the government was the business interruption loan schemes, and this is basically the provision of a guarantee which is available to banks to support and encourage them to provide funding to businesses. Initially, there was two schemes announced. So the first one was the COVID Corporate Financing Facility, which was aimed at larger investment grade companies, and secondly was the Coronavirus Business Interruption Loan Scheme, or CBILS as I'll refer to it as, which provides loans up to £5 million and is aimed at companies with turnover up to 45 million. Subsequently, and only last Thursday, the Chancellor announced an additional scheme for companies with turnover of between 45 and 500 million, and that's to borrow up to 25 million, and that's largely guaranteed by the government. So the general principle is for commercial lenders to provide the loans, but where there's security, where's a security gap, the government will step in and provide that guarantee to give the bank the comfort that you know, in the worst case scenario, they'll get their money back. So for the purposes of discussion this evening, I'll focus on CBILS because I think that's probably the most relevant for businesses in this area. So when the banks are, you know, when you're considering CBILS, the banks basically assess applications based on normal commercial lending criteria, and therefore, you know, being granted a loan under the scheme is not an automatic right. I think it's therefore important that you submit a strong lending proposal, and I personally would recommend that you should cover five key areas. So the first one is a commentary supported by financial analysis, demonstrating that you had a sound business prior to COVID-19. Because I don't think if you didn't have a business that was able to support a loan before going into the crisis, then you won't have one when you come back out of it. So it's important that the bank understands that the business was viable at the start. Secondly, you need to provide a clear description of how COVID-19 has impacted your business. Now that could mean that you may have customers who are not paying you. You may have customers that are no longer there. You might have additional costs that you need to incur. Thirdly, you need to describe the self-help measures that you've taken to address the current trading difficulties. and fourthly, a description of how your business will look post COVID-19 and how the CBILS loan will help you achieve this transition. Now, your business after the crisis may not look exactly the same as it was before, so it's important for you to assess what will be the long-term impact of the crisis on your business. And finally, and importantly, a forward plan clearly demonstrating that you have a viable business going forward, and importantly one that can service existing and any additional debt that you're looking to take on. So in my experience, banks will have a slightly different approach and they'll ask you for slightly different information. But I think it's important that, from my perspective, in my experience of working on projects, if you can prepare 3 different sets of cash flows on a monthly basis and over a period of 12 months, and this will enable you to demonstrate the short-term impact, but also show what the business will look like in 6 to 9 months' time, when hopefully things get back to normal. So I think the 3 scenarios are, firstly, a business as usual scenario where there's no COVID-19 impact, and that's typically your normal base case budget. The second one is showing the impact of COVID-19, and then the third one is a scenario incorporating all your cash management measures and self-help measures. And I think probably 1 and 3 are the ones that you want to show the bank. Number 2 might not look too healthy, so focus on number 3, which is applying the self-help measures that you're going to implement. So as I said, approval's not an automatic right, and I think you should seek financial advice before submitting your proposal, just to make sure that you're maximising your chances of success. I'll not go through the detail of the scheme, but the details can be found on our website and the government website, just in terms of the finer detail of the loan scheme. But happy to take questions on that later on. So the next area I want to talk about is cash flow management, and to discuss some practical steps that you should take during this difficult period. Probably one of the most common sayings in this current environment is cash is king. And that's absolutely true, and as business owners and managers, it's really important that you keep right on top of your current cash position and your short-term cash position. I think whilst the government is providing support, I don't think you should rely on it entirely. It's really important that you're proactive and you navigate your way through the current situation. So I think there's 4 key areas that you should focus on in the short term. The first one is very simple: prepare a short-term cash flow. So that could be on a daily or a weekly basis, and that will clearly show your working capital position and what your need is and what levers you can pull to remain within your facility. Second one, and very important, is manage all your stakeholders. So getting all your stakeholders onto the same page is really critical, but sometimes could be challenging because they may have competing interests. But bring your stakeholders along with you. And thirdly, once you get comfort in your short-term position, consider what your medium-term funding might look like, and speak to your bank or other providers of finance. And that might include the CBILS loan. Finally, and importantly, think about your director's responsibilities. If this is a really difficult period for your business, consider the implications on creditors and any decisions that you make. So Shona Campbell, my colleague, will expand on stakeholder management and directors' responsibilities a wee bit later on. But if I can share with you some practical steps on how to manage cash flow in the short term. It's critical that you understand your cash position, have a clear picture, and maintaining a cash flow forecast and regularly updating it is absolutely key. Before I joined MHA Henderson Loggie, I held a number of senior finance positions in companies who are facing challenges following the 2007 crisis. I've been in the trenches, I've been on the other side of the desk, and happy to share some of these experiences either now or after the webinar. Across all the projects I worked on, I had a constant companion, and that was over a period of about 4 years. And that was a 13-week rolling cash flow model. Now my approach was I updated that typically weekly on a Friday night or a Monday, and I'd circulate that to the senior management team and the board. And by sharing it, this makes sure that you, as a managing director or finance director, are not bearing all the burden of keeping cash on the right side of the line, but you're actually sharing it with a wider management team. So this allows and directs other people to make specific mitigating action. And I would tend to hold a meeting, a cash management meeting on a Wednesday, say, which was mandatory. Everybody needed to attend, and there'd be a sole focus of looking at the actions needed to manage cash. So I think it's a really good discipline to get into. And I think some of the cash management measures that you could consider would include asking for repayment, a payment holiday with your bank. You could look at releasing some equity from unencumbered assets from your HP provider. Agree extended payment terms from suppliers, including your landlord, although everybody's in the same situation, so that might be difficult. Renegotiate customer contracts, insistent payment holidays, etc. Insistent payment on delivery, for example. Request a time to pay arrangement with HMRC. And I think it's important this time, particularly with the job retention scheme, that you really look closely at your staffing levels and make sure that you're not overstaffed. And this might actually help you have a more efficient business going forward after the crisis is over. If you can consider deferral of payments to shareholders, directors and senior staff, and finally deferring any kind of current one-off related project costs. So I think if you manage the cash flow, do it on a weekly basis, do it regularly, and share it with your stakeholders to show them that you're actually on top of things. I think it's really important. I would say that some of these measures are delaying payments, so please be mindful that you're not just storing up liabilities which need to be settled at some point, and therefore just storing up an issue for a bigger issue for later on. And that's when it's important to recognise your responsibilities as directors. So look beyond the short term as well. So just to help, I've put together a very simple cash flow model. It's free to use and it's available on our website under the cash management support section. There's two versions, one with and one without an invoice finance facility. And as I said before, that was a constant companion for me when I was on the other side of the desk, and I found it very, very useful. So please access it and contact me if you need any guidance on how to use it. So just in summary, I think there's 4 very important do's and don'ts when it comes to cash management. So do get on top of and keep on top of your cash flow position by using a simple model. Do manage your stakeholders and communicate regularly with them. Do share the burden with your management team, and do seek advice when you need it. Don't stick your head in the sand or a bucket. Don't procrastinate. Take informed actions quickly. Don't kid yourself, and don't kid other members of the management team on in terms of being too optimistic about cash flow. Always take a slightly pessimistic view. And finally, don't be afraid to face the challenge head on and with confidence. I think you need to demonstrate confidence in you and your business when you're speaking to stakeholders. So hopefully that was helpful. I'll now pass you on to my colleague Alan Davis, who'll talk to you about some specific opportunities to improve VAT cash flow in your business. Thanks very much. Alan.
Can you hear me now?
Yep.
Yep, can hear you.
Okay, apologies for the slight delay there. Thanks very much, Rod. Rod kind of drilled down into some practical steps there, and in terms of VAT, that's very much where I'm about. There are a number of things that a business can do with VAT to manage cash flow, and we wanted to kind of highlight some of those at a high level. So what I'll do is I'll cover the automatic deferred payment scheme, approved schemes that HMRC may agree for time to pay. I'll talk about tax points and accruals, bad debt relief, very important just now, and trying to unearth retrospective claims that may help you get an absolute win, but certainly improve your cash flow. So the first of those, and we're living in strange times where HMRC are actually helping people, where they announced on the 20th of March that they would provide an automatic deferral period for VAT. So on the 20th of March up until the 30th of March, if your VAT liability fell due, then that liability could be deferred, and in fact is delayed and deferred until no later than the 31st of March 2021, sorry. So that's quite an extended period, and bearing in mind what Rod's just said, that's a deferral, not a going away, so it will come back, but it does give you much needed breathing room. So practically that's going to cover VAT returns that are due to be filed by the 7th of April, so that's your February return, the 7th of May, which is your March return, or the 7th of June, which will be your April return, depending on which quarters you're on. And in fact, you can also submit an early return, so a May 20 return could be submitted before the 30th of June, and that would qualify for a deferral as well. So the period of deferral ends on the 30th of June 2020. And above and beyond normal VAT returns, the deferral can apply to payments on accounts for large businesses, and also those smaller businesses who are perhaps using the annual accounting scheme and pay a regular amount each month, and that can be deferred as well. One of the little tripwires that fell out of the announcement was that the huge mechanism that is the HMRC website computer system won't cancel direct debits automatically. So in order to take advantage of the deferral, you do need to make sure your direct debit is cancelled so that the liability isn't just automatically picked up. And the second tripwire about that is that you must remember to restart it post 30th of June 2020. So probably worth putting something in the diary just to remind yourself that the next return will fall due as normal. Part of the deal of providing this automatic deferral system is that you still render your VAT returns, so you have the obligation to still submit them as normal. It's just the payment of those returns that's delayed. Anybody who's in the lucky position of having a claim return, the claims will be processed in the normal way and repaid in the normal way. I haven't heard of anybody having those delayed, so that seems to be going through fine. And then just finally on that, there's a couple of things that are not covered by the deferral arrangements, and that is MOS, the mini one-stop shop for electronic services. So if you're paying VAT in that method, then that still needs to be paid. And if you're paying VAT at import from third countries, then that VAT remains payable as well. And in addition, if you've had a recent assessment from an officer, that will need paying. And in fact, if you've already agreed before the 20th of March some terms to pay off a historic VAT debt, then that has to stick. Unfortunately, that doesn't come part of the deferral arrangements. So that's the kind of big headline automatic deferral scheme that they announced on the 20th. But they also, in the background, and in fact just slightly before that, did kind of loosen the noose around the time to pay arrangements that they will enter into with businesses. So they have relaxed those, and that's still available for the types of other things that wouldn't be agreed in that the period up to 30th of June. So it might apply to the things like historic assessments or some things like that. Or if you find yourself in July or August and still unable to pay VAT, you could seek a specific time to pay arrangement with HMRC. So some practical things that you need to think about when you're going through that process is to think about how best to approach that and go into the discussion as well prepared as possible. So you'll need obviously your things like your VAT number and reference number, and the amount of tax that you're finding difficult to pay. They'll also ask you specifically about what you've done to try and find the money to make payment, and how much you can pay immediately and how long you're going to need to pay the rest. So they're really looking for you coming forward with a plan of action rather than simply stating the obvious that you can't pay it right now. What they will do is discuss your income and expenditure currently. So this kind of marries neatly back to Rod's discussion about having a cash flow plan and you know, really plugging VAT into that and saying, well, how that's going to be dealt with. That will illustrate to HMRC that you're taking the matter seriously, and it obviously deals with the payment of taxes rather than putting it off forever and ever. And they'll be looking at, you know, what assets you've got, savings and investments, what you're really trying to do to resolve matters so that you can make a tax payment in due course. If you want to apply for that, there is a payment support service hotline in Customs and Excise, or Revenue and Customs rather, and their number is 0300. We'll cover this as a handout later on. 0300 200 3835. Again, limited experience so far, but people have been agreeing extended terms, certainly before the wider one was arranged, and since then as well. So that's a help for general businesses. So those are the two kind of main headlines. The other things I was going to quickly touch on are things that we talk to clients about all the time in terms of keeping cash flow good and strong in terms of VAT. And the first of those is tax points and accruals. So it's really focusing on how you bring things to account. So for example, on output tax on sales, a tax point will be created when you get paid, or when you issue an invoice, or when within 14 days of the supply being made. So around that, you might be thinking about, well, if I issue an invoice, I'll be having to pay the VAT. So could I instead issue a request for payment, which isn't a VAT invoice and doesn't create the tax point? Could I make use of cash accounting as a mechanism to account for VAT rather than having to do it on my sales invoice date? And you know, if my supplies are services and they continue, the tax point for that is essentially when I either get paid or when I issue an invoice. So could I either bring it forward or move it back? And I'll come back to that in just a second. On the purchases side, on input VAT on purchases, the most obvious thing to do is to claim as much as you can and get that kind of up to date as quickly as possible, so that you're making full claims for what you've paid out. At this very moment, with the deferral period up to for payments that are due before the end of June, there is an argument to say, well, I want my staff to focus on income, so I'm really spending a lot of time getting as many fee notes out as possible. And maybe I furloughed some of my accounts payable staff, and there's a delay on that. What that could do is mean that you've got quite a big payment to make at this time, but it's put off until March 21. And then when you bring back some accounts payable staff in July and August time, they can boost the reclaim in those periods and get the cash flow back through that way. So there is a thought that you could ensure that current returns are as large payments as possible, with a view to deferring that for as long as possible with the deferment scheme. So that's tax points and accruals. The other one is a general relief that's available that people don't make best use of, or I would say, and that's the ability to claim bad debt relief. So if you are accounting for your sales or the VAT on the sales as you issue the invoice, if you don't get paid, you are paying over VAT to HMRC before you have those funds yourself, and you're leaving yourself exposed. And obviously in these times, potentially more and more businesses will either delay or just not pay bills, and that VAT that you've paid over to HMRC will become bad. You're able to recover that VAT, but only after 6 months, and where you've posted that debt to a bad debt account in your records. It's quite a regular occurrence when I'm out seeing clients to find that they are procrastinating on these sort of things. It's one of these sort of things that ends up being done, if you're lucky, at the end of the year as they're tidying up the papers for the audit or accounts, that people think, I must have a look at bad debt relief. You can do it at any VAT return and just look back 6 months to invoices that you've issued and not been paid for. And the final one was really just to focus on getting some cash back into the business. And again, just thinking about experience, many businesses don't make the most of VAT that they've incurred and can recover. Lots of businesses are quite afraid, really, about what HMRC will make of them claiming things like motoring expenses, staff entertainment expenses, and things like that. So it's worthwhile just looking back on your expenses, protocols, and claiming procedures to make sure that you're making the most of those. And within that, there's also a real reluctance for businesses to make the most of international VAT reclaims. So if you have a workforce that maybe travel internationally or go to shows and exhibitions in the EU, there is a mechanism to get the VAT that they're incurring back. So things like hotel bills, travel, hire cars, things like that. VAT can be recovered all online nowadays, or at least while we're still in the EU. And that can be done fairly quickly. So claims for EU countries for the year ending in December 19 need to be submitted by 30th of September 20. So you've got a period of time where now if things have gone a bit quiet but you still have staff on hand, they could be looking towards making those claims. So that's a number of kind of practical things. For anybody who's interested, we've got a top 10 list of things. I've only done 5 of things that could improve your VAT cash flow. That's on our website. Things like changing your VAT return periods to help the cash flow timings of receipts and so on, and also focusing in on the VAT liability of the work that you do. Is that right, or is that causing issues in terms of if you weren't due to have paid VAT out, you've paid out money that's going to take a while to come back to you. So if you can avoid it in the first place, that really does help cash flow. So just again to recap, what we've looked at there is the automatic deferral payment scheme that's HMRC have made available, the ability to get time to pay arrangements in place, a real focus on tax points and accruals that will help businesses just time transactions, a focus back on bad debt relief that's available, that could be used without any difficulty really, and then just kind of trying to unearth and focus on your costs and unearth some input tax that's never been recovered historically. So that's the VAT practical steps part of the webinar. I'm going to hand you over now to my colleague Shona, who's going to bring things to a close. After you, then.
Okay. So I'm talking about interim restructuring options, and unfortunately I don't have a crystal ball to gaze into to tell you what's going to happen, what the future holds. Don't have a magic wand to wave and make everything all right. You know, Rod and Alan have provided some really tangible advice and tips. So what do I bring to the party? I'm an insolvency practitioner. That means I'm licensed effectively by the government to act as a liquidator or administrator of companies, and also act in personal insolvencies, sequestrations, bankruptcies, trust deeds. So lots of jokes about wearing black and carrying my scythe around, but I speak to businesses and individuals every week. You know, they may not be technically insolvent, but they're facing financial pressures, which they're struggling to find a way through. Different issues, different levels of pressure, but most of the businesses I speak to don't end up going through an insolvency process. They don't go bust. You know, sometimes there is an insolvency process. Sometimes there's an insolvency process which ends with a business coming out the other side. So I, you know, spend a lot of my time giving advice to businesses that don't know what to do, and helping them come up with solutions. So this is the structuring side of what I do. You know, this is what I'm going to talk to you about. Restructuring, it's a process that aims to ensure that businesses that are struggling can be made profitable and return to a healthy cash flow. Very broadly, two forms. There's the financial restructuring. That's where a business looks to essentially restructure its debt, the payments that it owes to creditors. And then there's the operational restructuring side of things, where a business looks to change the way that it's structured and how it works. So unlike insolvency procedures, a licence isn't needed to provide restructuring advice, but restructuring advisors tend to have insolvency experience or a professional background in law or in accountancy, and I've got a bit of background in all three. So at the moment, what we're facing, it's unprecedented in our lifetime, and the cause is the same for everyone, and many of the impacts that to individuals and businesses, they're similar, but each and every business is facing its own unique set of circumstances, and therefore there's different options that are open to it. Some people have a perception that this is something that's happening to them and that this is all out of their control, and hopefully Alan and Rod have sort of made it clear there are some things that you can do. There's always decisions that you can make, there's always actions that you can take, and I think Rod's four don'ts, some of the like three of them: don't stick your head in the sand, don't kid yourself on, don't be afraid to face the challenge head on. Sometimes the worst thing you can do is nothing. So basically what I'm saying is I don't have the answer, but I can talk you through the restructuring methodology. So six key steps in restructuring, and step one is, what is the current position? Where are you now? It's probably two parts to that, which is firstly assets and liabilities, list them down. And then the second part is cash flow, and this is key. Cash is king. Managing your cash flow, monitoring your cash flow is absolutely, it's key to any restructuring process. So Rod told you about his trusted companion, his 13-week cash flow. Why 13 weeks? 3 months. It includes any quarterly payments, VAT being the classic one, perhaps the rent. It's typically considered far enough ahead to be reasonably accurate. Things move slightly changed there, but 3 months, the reasonable visibility on what's happening. You will have to make assumptions in that, but reasonable assumptions. So step one, where are you now? What does your cash look at? Number two, especially when I do get involved when things are severe financial pressures facing a business. Step two is, how long have we got? And your cash flow drives that. Is there a burning platform? Because obviously the less time we have, the less options that we have. So what is the time frame? And the time frame will help us determine what the options are. And again, Rod there spoke about different cash flows with showing your mitigation and some steps that you've taken to move things in your cash flow. Next step 3, is what are the options? Just list them, and I think the notes that Alan and Rod are going to prepare to provide after this, but just some bullet points there of things that you can look at. So, and options aren't binary. You can mix and match them, and some will be financial, some will be operational. Is there an easy pivot? Same business, different operating method. So just go down, list all the options. Step 4 is pros and cons. Going through the options, what are the pros and cons of each one? Some will be easier to implement than others, but some will have be difficult to put into place, but have a big impact on the business. And then you get to step 5, which is you pick one. Or more. Like I say, they're not mutually exclusive. And the other thing to think about here is about the contingency plan as well. So you can have your plan A, but quite often it's helpful to have plan B just sitting there, maybe working along in tandem if you can, so that if plan A doesn't work out, you've not got all your eggs in the one basket. And then step 6 is to implement your plan. And then in restructuring, right the way through these 6 key steps, there's 2 things that you continually need to do, and one of them is to monitor and check on your cash. on a weekly basis. Some businesses I've been involved with have been doing it on a daily basis. Rod's spoken a lot about cash, and I'm not going to touch on too much here on that, other than to say it's imperative that you keep your eye on the cash and what it's doing. The second thing is that you need to do right the way through a restructuring process is your stakeholder engagement and management. Every business will have different stakeholders, and different businesses will have different key stakeholders: your employees, shareholders, landlords, lenders, suppliers, customers, regulatory bodies, even the government, local government. You need to regularly keep them updated and share with them information. You need to tell them what you're going to do. You need to do it, and you need to keep the information, the communication flow open, and bring them with you on the journey. So key steps. Just go over them again, 6 key steps. 1, what's the current position? Remember and do your cash flow projection. Assess what your time frame is. Can you make that time frame longer? List your options. What are the pros and cons of each one? Pick one or more and think about a contingency, and implement your plan while monitoring and maintaining the cash flow projection and keeping engaged with your stakeholders. I think for the next bit of what I'm going to talk about, I thought it would be helpful or interesting for you to hear about some of the advice that I'm currently giving to businesses. And I had a catch up today with another group or a group of insolvency practitioners, so people like myself, and the common themes in terms of what we're seeing and the sort of advice that we're giving. So for a few businesses at the moment, what's happened has been the final straw. Businesses have been struggling for a long time, unable to prove that they're viable, no cash with which to make payments that they are due to pay. So very limited options. And in some of these cases, you've got a business owner who just no longer has the will or the energy to take on the challenge of seeing their business through the next few weeks and through this crisis. And these cases are proceeding to administration or liquidation, particularly if there are employees that can't be paid. So obviously the furlough scheme, the job retention scheme is available, but you need to pay cash out for that. And if you don't have cash to pay out, you can't get your employees on to get that along that scheme with you. So you're in a position where you have to make them redundant. If you don't have the money to make them redundant, the one way to do that is to appoint an insolvency practitioner, and then the practitioner can claim the amounts for the employees from the government. So there are certainly some insolvency processes that are going through, but I would say that these are a minority. We are not, insolvency practitioners aren't seeing an increase in cases because of the corona crisis, and some have furloughed staff as well. So actually perhaps seeing a downtick in activity from that sort of formal insolvency side of things. So we're speaking to many businesses that are concerned about the future and sort of going through that. Well, what's your cash position? How long have you got? What are the options? How, and going through some of the things that Alan and Rod have discussed. Lack of cash flow, doubtful debts, but at the end of the day, if they, quite often what we're saying is, well, what you need to do is just retrench, maybe not mothball. It depends on the type of business, and every business is different, but minimise your outgoings, tread water, do what you can do to protect your core business, take time to plan for the new normal. There's forbearance there from lenders and suppliers. It means that enforcement action is unlikely at the moment. HMRC, who are the most prolific winding up creditor in Scotland, have said they will only wind up companies in cases of criminal or fraudulent activity. The courts aren't hearing insolvency related matters in Scotland. It's not considered essential, and sheriff officers aren't carrying out their sort of door-to-door delivery of any statutory demand and legal documentation. And there's also in Scotland now there's a moratorium for personal insolvency, so individuals that are worried about creditor action, repossession houses and the like, they have there's a moratorium which has been extended to 6 months for that. So this is all together, and together with the the wide government support that's available, it gives businesses have the best chance of survival. And read about being mindful of directors' duties, and it's all very well being able to agree with a creditor, such as a HMRC or a landlord or another key supplier, that you are not going to pay them what you're due them now, but you'll pay it later. But you just have to watch that how much is this big pile adding up to, and when is later going to be, and how much are you going to be due them. But certainly, one of the things that as an insolvency practitioner, I regularly refer to when I'm speaking to directors is just this, and what is called wrongful trading. And wrongful trading is where a director knows, or ought to have known, that there was no reasonable process in insolvency, and if that is the case, the director can be held liable, personally liable, for the increase in the amount that is due to that he knew or ought to have known. And so the advice for a director in that circumstance is normally, you will be personally liable if you continue to trade, because there's no prospect of avoiding insolvency. Now, the government announced 29th of March that I've got the quote here, amend insolvency law to give companies breathing space and keep trading while they explore options for rescue. So it's all lacking in detail there, but what the note said was that this was around the wrongful trading rules, and they are going to remove or relax the wrongful trading rules for a period of time, backdated to the 1st of March. And what that's all about is reassuring directors to give them the time to make difficult decisions about the future viability of the business, and not to be unduly influenced exceptional circumstances that are going on at the moment, and entirely beyond their control. Now, this doesn't remove all the duties that you have to all your directors' duties, or the fact that you have to prioritise creditors that act in the best interest when you're sort of in the zone of insolvency. But what it certainly does, it should give some comfort to directors that they can take time, and that what the government are wanting to avoid is that, because of the director's view of the personal risk here, is that they just put all businesses, all directors everywhere, right, left and centre, are putting their businesses into liquidation, which is not going to do the economy any good. So that there is that comfort there to directors that are facing really difficult decisions. So all of this together is that there's an environment there that's looking for viable businesses to come out here, and in terms of what you need to do as a business owner is take some advice, speak to your trusted advisor, whether that's a lawyer, accountant. As you're going through things, you need to take notes of the decisions at the time they were made and why you made those decisions. You need to keep your stakeholders updated and on board. You need to keep an eye on your cash flow. And I think that's probably all I've got to say. So we'll just move on to see if anyone's got any questions.
That's fab. Thanks very much, Shona. What we'll do in a wee minute, I'm going to hand over to my colleague Donna, and she'll give everybody the chance to unmute and ask their questions. But I want to ask one, and it's not really aimed at any one of you in particular, but I guess it's something that I'm interested in, and hopefully the others will be too. Are you seeing any one sector or one type of business, like large businesses, small businesses? Is there a theme about who's really struggling with getting on top of their cash flow? Who's going to jump in and answer that one?
Yeah, I'll maybe answer that. Obviously, retail and hospitality has been hit really hard, and as well as their business, the businesses that are relying on on these sectors, I think, are particularly hard. I think it's probably, it's hitting smaller businesses, I think, worse than larger businesses, who maybe have more reserves stored up for a rainy day. But I don't, other than that, I don't think it's sector specific. I think it's down to the strength of the business before the COVID-19 situation arose.
Great, thank you so much. Donna, do you want to just come in and we can give the audience a chance to ask any questions?
Sure, at the moment we've really only got one question from Dave Nicholson, who's got a question if he wants to come online and ask you that.
Yeah, it was a general question. Given the state of many businesses within the whole sector, every different sector, tourism, leisure, engineering, manufacturing, is this a good time to consider your own financial structures and relate that to possible merger with another company within your same sector? For instance, they may have a greater finance background than in your own business, and as an owner, you will then know whether you could trade out of this when we get out of the lockdown. So it's a case of, is this a good time to consider that?
What I would say is that I think that's an option. There is, in times of crisis, there's opportunity. So a merger is one option. A takeover or some sort of amalgamation, there will be synergies there, whereby two businesses joining together are stronger than the two separate parts. So I think that's there is as well as this whole pandemic being a sort of very frightening and scary and intimidating thing to be going through, we can't lose sight of that. For some businesses, this is a real opportunity for them. It's not all doom and gloom. So
yeah.
If I could maybe add to that, I mean, I think what you don't want to do is make a rash decision, and that's when it comes back to your cash flow and how long have you got. Because if you make a rash decision and go into a merger with somebody who's much more financially stable, then shareholder value is going to be destroyed probably. And I think it's important, hopefully we'll come out of this sooner rather than later. And actually the process that companies will probably go through over the next couple of months might actually make them stronger and more efficient companies. So I guess you need to take a view on, because you'll have looked very, very closely at your costs and your cash flow and made the business more efficient. So I guess it's a balancing act. If the only alternative is to phone Shona or one of her insolvency practitioner colleagues, then yeah, absolutely, have a discussion with a merger partner.
Thank you.
Well, that's all the questions, unless someone else has got something they want to add. It's over to you then, Alison, is it? You need to unmic.
Done that about 6 times today. Thank you, Donna. Thank yous wouldn't sound very good if all you could see was my mouth moving and not much coming out of it. So yeah, I mean, just a big thank you to our speakers, to MHA Henderson Loggie for partnering with us in today's webinar. There's lots, I think there's an awful lot of actions, and there will be a follow-up from the session where we'll put out a survey, but we'll also put out a bunch of links to a lot of that content that we were signposting you to. Please pass that on, because it's not just useful for you that have joined the call today, but it's really useful for your contacts as well. I just want to kind of also round up with a couple of the webinars that we've got coming up. So our current series is obviously, we're doing 3 webinars during the week, during the day. So today we had, our Tuesday one is coffee and a cake catch up, which is just open to members, and that's networking and businesses getting the chance to share what's going on with them. But tomorrow at 12:30 we've got running a virtual team. So we've got a couple of speakers that are going to talk about the practical tips about that and how how culture is important there and how to really implement a successful team virtually. Thursday this week, our business support webinar is about risk management and business resilience and continuity as well. So, you know, we're still speaking to people that are saying, well, we're kind of managing, but, you know, we could have been, you know, we could be better equipped. So, you know, we're going to cover that on Thursday. And then next week, we'll be back to the Tuesday, Wednesday, Thursday programme. But slightly ahead as well, we've also got something that we were going to do as a face-to-face session, but it's actually one of our circular Tayside workshops. So on the 23rd of April, we've got a session where we're looking at how to have your office in a more circular, strategic manner. So it's definitely for everybody that's got an office out there. This will be about looking at how to decrease your operational waste, cut your costs, increase your profits, and just think in a more circular way. So that will kind of give us a bit of something interesting to look forward to, rather than, you know, we're in the midst of all of this at the moment. So thanks very much for your attendance this evening. If you've got any questions, then you know, we will connect you with any of the speakers and follow up with all of that information. So enjoy the rest of your evening. If you've not been out for your one a day bit of exercise, then time to go out and enjoy that now. I think the sun might be away though. Thanks very much, folks. Thanks for coming. Evening. Bye.
Thank you.